Hey everyone, and thanks for jumping back into the equityverse. Today, we're going to talk about the stock market, the S&P 500, and show why the evidence that a stock market crash is about to happen does not really exist. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Now, if you follow this channel a lot, you know we mainly jump into the cryptoverse, which is where I've been saying for a long time the best risk-adjusted returns are. And so far, I think that proves to be the case. While stocks have performed remarkably well over the last year, they still mostly pale in comparison to Bitcoin, Ethereum, and a lot of other cryptocurrencies. And I know the cryptoverse can seem like a scary place for people, but now that some billionaires are wising up, the best kept secret in the world is no longer quite such a secret anymore. Let's focus on where the stock market is today and why we can stay this way for years and years and years. And there are a lot of people back in March and April of 2020 that were saying we were going into the next Great Depression, that were saying we were going into this major recession. And what did we say? We came on the channel back then and said, hey guys, the risk levels on the stocks right now, you know, the S&P 500, mutual funds, super low, right? Super low. This is almost unprecedented, the type of drop that we saw, and as quickly as we saw it, almost basically unprecedented. And that was the time to really push hard into equities. This is what we said. Now, at the time, a lot of people were calling for the next Great Depression and whatnot. But again, we said there's very little evidence for that. If you put your emotions aside, and don't listen to the doomsdayers constantly, and just look at the numbers, look at what's happened in the stock market for the last 100 years, you'll recognize that we're doing the same thing we have done. And here we're going to look into the numbers, okay? So one of the things you'll notice is this is the 200-week moving average, okay? And historically, anytime we are remotely close to the 200-week moving average, this is a great time to come into the market. Now, arguably, we could spend years below it. Okay, there was a period over here from 08 until 2010, we were below it. But I would argue, who cares? Most people invest in the stock market for long-term moves, and that's what this channel is focused on. It's not focused on day trading, so if you think this is a day trading channel, then of course move along, because that's not the focus. The focus is to say, hey, when we're looking at the stock market, we know that it generally trends up over time, and yes, there are corrections along the way, but it does not detract from the fact that it generally trends upward. Anytime we are below that 200-week moving average, it usually presents a great opportunity to move in. We said this back in March of 2020 over here, and look, it stood the test of time, and it's already been a great move to make. Now, what we're going to do is we're going to really dig into where we currently are in the stock market, because yes, it can look somewhat scary seeing it this far extended from a first glance. For instance, if you were to take a measured move from the 200-week moving average to the current prices, we are about 40% above it. However, is this unprecedented, or have we seen this many times before? Well, if you go look at, say, 2014, you'll see there were times we were 33% extended from it. There were other times over here where we were maybe 27%. There was a time back over here in 2018 when we reached as high as 30%. So yes, the stock market is getting relatively far extended from the 200-week moving average when you look at the last few years. However, we have these little pullbacks occasionally, and these pullbacks can be quite substantial, taking it from 31% all the way down to 18%. And this was back in October, and despite that, the stock market has been generally moving up. Now, it doesn't make sense to go back and look at every single measured move because it's hard to eyeball it. So what we're going to do is we're going to look at it in a way that makes sense. So I have a little indicator where it's the natural log of the price over the 200-week moving average, okay, the 200-week SMA. And we're going to use this to gauge where we currently are and if we've been in that area in the past, okay? So this one's the 20-week, this one is the 200-week. So we'll take a look at the 200-week one first, okay? What do you notice at first glance? March of 2020, opportunity, huge opportunity, okay? Anytime it's red, pretty much an opportunity, okay? But what we're going to do is we don't care about that because that's in the past, and we're going to say, well, where are we today? Have we been this far extended in the past, and how far do we have to go back to get to this level of overextension from the 20-week moving average? In order to get to that level, you would have to go back approximately 21 years, back to 2000. You might say, well, hold on a second, 21 years? That makes it seem like it's something that hardly ever happens and should leave you running for the hills. And I can tell you, I've listened to my fair share of podcasts of people over the last year saying that another crash is imminent. And I've been saying every time I do a stock market video, which is about every 3 or 4 months usually, I keep saying, hey guys, no evidence for it at all. This is just noise. They're going to be right eventually. The bears will be right eventually. And when they're right, they'll remind you for the next 10 years until they're right again. But the bulls are the ones that usually stand the test of time. Now, if we go back to the 2000 time frame and even go back further, you might say, well, Ben, it looks like it's been so long since we've been this extended from the 200-week moving average. But if you ignore the little moves below it, you can see that we mostly spent our time above the current level of extension from the 200-week moving average in this entire region right here. And you might say, well, how long is that? Because looking at a chart like this, it doesn't really tell you that much. This is about 171 weeks. We're talking about 3 years. 3 years where we spent a decent amount of time at levels of extension above the 200-week moving average higher than we currently are. Higher than we currently are. So is the stock market extended? In the short term, yes. I mean, compared to where we are typically, it is slightly extended. However, the problem is that people could say this for the next several years and it might not change. Okay? And this is what I want to caution people against is, again, there's always going to be someone out there, tons and tons of people, that'll be making the clickbait YouTube videos telling you about the housing crash or the stock market crash of 2021. What have we said all along? There's no evidence for any of that stuff. These people are shilling stuff that makes no sense. No evidence for it in the charts, no evidence from a fundamental perspective. Even if you look at real estate, the spread on the basis points is nowhere near what it would need to be to signify a crash. And a lot of investors are there to scoop up real estate. And we said this a year ago. So let's stay focused here. Recognize that, is the stock market extended from typical values? The answer is yes. It is slightly extended from typical values because you'd have to go back 21 years just to get to the same level of extension. But the thing is, this extension lasted for about 3 years. And what we're going to do is we're going to take that measured move to just show you exactly what I'm talking about. For instance, from here, you can see this was about a 40% overextension, but that did not mean we had an immediate pullback to the 200-week moving average of 23% or anything. Yes, we had some pullbacks along the way, and yes, anytime the stock market drops 5%, everyone's going to scream dump. But you look at this point when it was overextended by about 38%, it still went up another 130% before even going back to the 200-week moving average. And what's furthermore, by the time it actually had a significant dump, that dump to the bottom of these wicks was still 15% higher than where we were when we were 38% extended from the 200-week moving average. So when you look at the numbers, it shows, hey, in the grand scheme of the entire stock market, yes, we're at areas where we're extended a little bit. However, at the same time, we know that this can go on for several years. And so the idea that you need to be constantly running for the hills with your profits on equities, I feel like, is somewhat unjustified. It's not financial advice. I'm just providing my rational perspective on the market. If you've never watched my channel before, because I don't generally talk about the stock market, again, it's because I like to chase the most attractive risk-adjusted returns. And for me, like it was a year ago and the year before that, it was cryptocurrency. And I feel like crypto will stand the test of time. And I'll use this video as an opportunity to say, crypto's probably more than you think it is. Okay, and I would encourage you to actually dive deep into it and see, what is it about crypto that bring people back? Okay, why do people keep coming back? And you might say that you might always look at crypto and say, well, you feel like you're too late. But then what do you notice is when you zoom out, yes, crypto is full of boom and bust cycles, but it generally trends up over the macro scale. You just need to avoid being the person that comes in at the very top and sells at the very bottom. Just don't be that guy. Don't be that guy. And one way to not be that guy is a systematic DCA approach. Okay, so again, I'm not going to use this video to just endlessly shill Bitcoin because, of course, Bitcoin is fairly extended. I mean, it's up 20x or so in about 14 months. So I'm not here to say that. The point is, just like Bitcoin, just like the stock market, just like the real estate market, there will always be bears to tell you that it's about to crash, and usually they will be wrong. Usually they will be wrong. Occasionally they'll be right. They'll remind you of it for the next 10 years. However, even when they are right, who cares? You see that as an opportunity, because if history is any indication, buying below the 200-week moving average has been great for the stock market, and we can look at this going back years and years and years. The stock market will very likely stand the test of time, so I would say do not get too worried about short-term price movements. Okay? Yes, we're extended. Can stay like that for years. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. Also check out the premium list for access to weekly reports and videos. We mainly focus on cryptocurrency. Again, we do sometimes talk about other things like equities and precious metals. You can find a link to the premium list if you want exclusive content in the description below as well. Thank you guys for tuning in. Make sure you subscribe, and I'll see you next time. Bye.